This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Powerful storm. Hurricane Harvey intensifies. With Texas its target. Refiners are shut, oil output has been cut, ports and businesses are closed, and the aftermath could ripple through the economy. Rollback regulations, not so fast, says the Fed chair, making a forceful defense of the rules governing Wall Street at an influential meeting of central bankers. The money fight, the big bucks behind what could be one of the most lucrative matches in history. Those stories and more tonight on Nightly Business Report for Friday, August 25th. Good evening, everyone, and welcome. I'm Sue Herrera. Tyler Matheson is off tonight. We begin with Hurricane Harvey, a massive storm that strengthened into a Category 3 this afternoon. It is now barreling towards Texas and the center of American energy activity. The Texas Gulf Coast is home to as much as half of the nation's oil refining capacity. The area hosts pipelines that carry oil and gas to the rest of the country. Ports in that region have been closed, preventing goods from getting where they need to go. And to help put the potential economic impact into perspective, about 3.5% of total U.S. GDP is estimated to be made up in the state of Texas. Millions of people live in and around cities like Houston and Galveston and Corpus Christi. And that is where Jackie DeAngelis is for us tonight.
The eye of Hurricane Harvey approaching the coast of Texas. Some people have evacuated already, others have not, stocking up on food and hunkering down their homes to be ready for the storm.
My father's handicapped and my parents are pretty old, so financially we don't have the money to go ahead and take that ride out of town. So we're gonna go ahead and stick it out here, you know, and we got sandbags ready. We've got our food for almost a week now. We've got water, we've got everything we need.
The mayor of Corpus Christi under scrutiny because he did not force an evacuation. The evacuations here were voluntary.
When you trigger a mandatory evacuation, it triggers a lot of things, particularly for the business community and for our businesses in this community. That means if it's required, if we call for a mandatory, that means you've got to start loading up patients in hospitals, our children's hospitals, our nursing homes, and transporting them somewhere. And that really creates a hardship on a lot of people.
Of course, Corpus Christi is known for housing 5 refineries. Those will be important to the energy markets in the coming days. Also, the port here critical, now closed.
After the storm passes, it will still take several days for us to get back and operating. I would expect if this is as severe as they're calling, it will be midweek till we're back running full speed.
For those who haven't left, it could be a rough few days. This storm is expected to hover, and they need to hunker down. For Nightly Business Report, I'm Jackie DeAngelis, Corpus Christi, Texas.
So how much of an economic ripple could we get from Hurricane Harvey? Gus Foshay is the chief economist at PNC Financial Group, and he joins us now to discuss. Welcome, Gus. Nice to have you here. You know, when I hear words like catastrophic, massive, I mean, this is no ordinary storm, certainly. What do you anticipate might be the economic impact of it?
Well, I mean, obviously, we're going to have to see how much damage there is, but there's the potential for enormous damage. The Houston area economy is the 4th largest metropolitan area economy in the United States. It's home to a lot of refining plants. It's home to a lot of ports. And so there is the potential for a huge amount of economic disruption if the storm is as bad as it appears it might be.
Yeah, one of the things that they're talking about is what Jackie DeAngelis just mentioned, the fact that once it makes landfall, it could linger for some days, many are saying. So does that change the equation? It makes it harder for businesses to reopen. It makes it tougher for people that have left to get back to their homes.
Absolutely, and also that increases the potential for economic damage throughout the United States. So if the refineries are shut down for an extended period of time, that means less gasoline production in the U.S. We could see gasoline prices move a lot higher. If the ports are shut down, that means fewer goods moving through them. So it's also, you know, it's not just the local economy, but there is some potential for significant effects on the U.S. economy as well.
Yeah, we saw some of that with Superstorm Sandy, although probably not to as great an extent because of the refining capabilities and the gasoline prices. What kind of an impact, economic impact, do you think a rise in gasoline prices might have? We talked to the chief economist with Gas Buddy last night, and he suggested maybe up to a 15 cent move in gasoline prices.
I mean, we certainly could see a significant spike in gasoline prices. That is, you know, if we don't have significant permanent damage, then that should quickly come down. So I don't think that should be a huge problem for consumers. But certainly if consumers are paying more for gasoline, that means they have less money to spend on other goods and services. So depending on how long that spike lasts, it could be a problem for consumer spending in the third quarter of this year.
All right, Gus, thank you very much. Gus Foshay with PNC Financial Group. The world's most powerful central bankers are meeting at their annual gathering hole in Jackson Hole. Today, the Federal Reserve Chair spoke, and while she didn't talk about interest rates, she did have a warning for Washington and its push to roll back financial regulations. Steve Leisman has more.
Flanked by the president of the European Central Bank and the governor of the Bank of Japan, Janet Yellen took what might have been her final stroll as chair of the Federal Reserve in Jackson Hole on Friday. Her term is up in January, and while President Donald Trump has said she's under consideration for reappointment, her speech on financial regulatory reform here may not have helped her case. With a president who has said he wants to do a, quote, big number on the Dodd-Frank Financial Reform Act, Yellen cautioned against rolling back the essential reforms from the crisis. Yellen said they had made the financial system more stable and improved the banks and economic growth. She said it may be more difficult for some borrowers to obtain credit, but that overall lending was growing in line with the economy, contradicting a direct statement by the president about the need to reduce regulations. Yellen did concede that some rules could be reformed, for example, those about small and medium-sized banks. In a CNBC interview, Fed Governor Jay Powell disagreed there was a conflict now between the administration and the Fed.
We need to protect the important fundamental reforms, higher capital, higher liquidity, stress testing, resolution planning, that sort of thing. But at the same time, she said clearly that we're committed to reviewing the reforms to see whether they're effective and where there can be improvement. She said that several times in her speech, and that's exactly what we've been doing. We're looking at improvements, you know, to lighten the regulatory burden for small banks, and I've got there are a long list of things that we're working for. These are common sense reforms to achieve effective regulation, but without unnecessary burden.
Yellen made no comment on monetary policy, but ECB President Mario Draghi did. He said that an easy monetary policy was still needed in Europe and that the European recovery was still in its early stages, that the ECB should be patient in reversing policy. Markets have been anticipating some announcement about the ECB easing off on the accelerator later this year. But Draghi chose not to make that news here in the Teton Mountains in Jackson Hole. For Nightly Business Report, I'm Steve Leisman in Jackson Hole, Wyoming.
On Wall Street, stocks mostly rose, lifted by high dividend-paying stocks after Federal Reserve Chair Janet Yellen offered few clues about the path of monetary policy in her speech today. The Dow Jones Industrial Average rose 30 points to 21,813. The Nasdaq was off 5 and the S&P 500 added 4. The Dow notched its first weekly gain in 3. The Nasdaq and the S&P 500 were also higher on the week. Investors pulled money from U.S. equity funds for the 10th straight week, marking the longest stretch in 13 years. According to Bank of America Merrill Lynch, total outflows since the end of June now stand at $30 billion. Some market watchers say that the political deadlock in Washington is casting doubt on the market rally. For much of the year, money that's been leaving U.S. stocks has found a home in Europe. Well, the economy got some not-so-good news today. Orders for durable goods fell more than 6.5%, the most in nearly 3 years. According to the Commerce Department, the decline was led by a drop in the volatile category of civilian aircraft. But there was some positive news. Within that report, a gauge of business investment rose last month. President Trump will start publicly campaigning for tax reform next week. That's according to the president's top economic advisor, Gary Cohn. He made the statement in an interview with the Financial Times, where he also criticized the president for his response to Charlottesville. Eamon Javers is at the White House tonight.
National Economic Council Director Gary Cohn offered some insights into the tax reform proposal from here at the White House in an interview published in the Financial Times this morning. In it, Gary Cohn suggested that the big three deductions, that is, charitable, mortgage, and retirement savings deductions, will all likely be protected in the new tax reform effort. He says that the team that's working on the proposal envisions imposing a one-time repatriation tax on offshore corporate earnings, but he said that Congress ultimately will decide which corporate tax deductions stay and which will go. He added that they're no longer discussing the so-called border adjustment tax. They've decided to move away from that proposal. Cohn also addressed his future here at the Trump White House, saying that he had been under pressure from a lot of sides to either stay or resign his post in the wake of the president's handling of the Charlottesville, Virginia racial violence. Cohn saying, though, he is inclined to stay on the job. For Nightly Business Report, I'm Eamon Javers at the White House.
Still ahead, looking for stocks that could double their dividends? Our Market Monitor has some recommendations. The White House has ordered a new round of economic sanctions on Venezuela. The order bars U.S. citizens and banks from buying new bonds from the Venezuelan government or its state oil company. The sanctions come as the Trump administration steps up its criticism of Venezuela's President Nicolas Maduro.
Let me be clear. Today's action is focused on restricting the regime's access to American debt and equity markets. Maduro may no longer take advantage of the American financial system to facilitate the wholesale looting of the Venezuelan economy at the expense of the Venezuelan people.
At the same news conference, Secretary Mnuchin also commented on the debt ceiling. He said it will be raised in September and that after talks with congressional leaders from both parties, everyone is, quote, on the same page. The de facto chief of Samsung has been found guilty of bribery and other corruption charges. The billionaire son of Samsung's ailing chairman was sentenced to 5 years in prison. That was less than the 12 years that prosecutors sought. His attorneys plan to appeal, and it is unclear who will lead Samsung if he is in prison. Samsung's businesses are estimated to account for about 15% of South Korea's economy. As we reported, the housing market had a lousy week. A number of reports showed a sharp slowdown, and there's a chance things could get worse. Diana Olick looks at some of the challenges the real estate market could be facing.
I want to start with some cold, hard facts about today's housing market. There are houses for sale, but not nearly enough. There is high housing demand, but more and more potential buyers are struggling to afford down payments, and home price gains are accelerating again. Home builders are not putting up enough homes. They're not even back to normal historical levels of production, nor are they shifting significantly to entry-level models. Add all that up and you see why sales are now slumping. But there are two more things that could make matters worse in the next 6 months. Higher mortgage rates. Yes, they've been sitting near year lows, and all the talk of higher rates hasn't happened yet. But the Federal Reserve is going to shrink its balance sheet of mortgage bonds, and if inflation rises, it could taper even more, both of which will push rates higher. Then there's the emotionally and politically popular mortgage interest deduction. It's never on the table, except maybe now. House Speaker Paul Ryan suggested it could be improved, and industry insiders say the Treasury is already considering cutting the current cap of $1 million in mortgage debt in half. That would only hit about 4% of taxpayers who benefit, but could take a much bigger bite out of confidence in the housing market. Bottom line, if the market doesn't see significantly more supply in the coming months, which is not expected, affordability will weaken even more and keep even more potential buyers on the sidelines. For Nightly Business Report, I'm Diana Olick in Washington.
And to read more about housing's potential challenges, head to our website, nbr.com. Big Lots lifts its earnings guidance for the year, and that's where we begin tonight's market focus. An increase in furniture sales helped the discount retailer grow sales and profit, with both results coming in ahead of street targets. Same-store sales also rose, and they were better than expected. But shares still fell nearly 1% to $49.61. Adamis Pharmaceuticals said its medication for treating a side effect caused by a commonly prescribed drug for Parkinson's disease was given the green light by the Food and Drug Administration. It is the first drug of its kind to win regulatory approval. So the shares surged 40% to $19.93. The drug maker Novo said the FDA has cleared its diabetes drug as a treatment to lower the risk of heart-related diseases. The company said this is the first time the agency has approved a diabetes treatment for reducing heart complications in patients with type 2 diabetes. Novo Nordisk shares were up 1% to $46.13. And shares of GameStop continued to fall today following the video game retailer's earnings miss, which was after the bell yesterday. Revenues topped estimates, and the company also reported a surprise rise in same-store sales. That wasn't enough to impress investors, though. Shares plunged nearly 11% to $19.40. Time now for our market monitor, who likes companies he says are growing their dividends. The last time he was on was in January, and he recommended U.S. Bancorp, which is up 3%, United Airlines, which is down 14%, and Valero, which is 3% higher. Bob Phillips rejoins us, managing principal at Spectrum Management Group. Welcome back, Bob. Nice to have you here.
Thank you, Sue. Thanks for having me.
Before we get into your recommendations, I'd like kind of a broad swath picture of the market from you. There are divisions on the street. Most agree that we had a pretty good earnings season, but others are saying, yes, we did, but the market is either fully valued or maybe even slightly overvalued. How do you feel about it?
Yeah, I think I would agree with most of those assessments. I mean, it's been a good earnings season. The question is, can earnings keep growing at the same rate going forward? By practically all historical measures, the market is fully valued and in most cases overvalued, but you've got to put that in context of where interest rates are. Interest rates are still very, very low. We don't see policies changing that will cause, midterm to long-term rates to rise. Short-term rates, yes, with the Federal Reserve and the central banks possibly raising short-term rates, but long rates won't go anyplace.
All right.
And that's going to keep valuations in their stocks.
Let's get to your stock picks. Last time you liked Valero, you still like it and you still hold it. Why?
Yes, Valero, it's only up 3% year to date, and people lose sight of what's happening when they look at the S&P and what's happening to the index returns. But Valero's dividend has grown by about 17% over a year ago. And that all happened just this year. So we invest for individual investors. Individual investors need cash flow, typically at some point in life. And most people don't recognize the fact that companies that consistently grow a dividend, that strategy outperforms practically any other investment strategy over time.
Does Valero have any exposure in the Gulf of Mexico with Hurricane Harvey bearing down there?
Yeah, that's a good question. They have huge exposure. They've been through many hurricanes in the past. They've got vital services and products they provide, so they could be probably will be shut down for some period of time with their operations there, but they're spread around the country and they will come back.
All right.
And we believe they can keep growing that dividend going forward.
Accenture, next on the list. You like its new services, digital, cloud, and the like.
Yeah, correct. So as we look at where sales growth has been consistent the last few years and where it will be in the future, it's been coming out of the technology sector. So, a theme for us is find companies that can benefit from all the things happening in technology. So Accenture is a consulting company. They provide consulting services to business to get involved with the cloud, to digitize business. And those services for them grew double digits the last 12 months. The dividend's not terribly high right now, about 2%. But we think they can grow that by 12% per year going forward.
All right. Now, an indirect play on technology, Digital Realty.
Yeah, Digital Realty, we call Digital Realty the company that actually houses the cloud. They buy the real estate that holds all the equipment and many of the service companies that make the cloud work. They've got a big presence in the U.S. and they're moving out internationally, and they've got a long runway ahead of them. You know, again, it's 3% plus dividend that we think can keep growing by high single digits going forward.
On that note, Bob, thanks so much. Have a great weekend.
Thank you, Sue.
Bob Phillips with Spectrum Management Group. Floyd Mayweather and Conor McGregor will battle in a boxing ring this weekend, and it will likely be the most viewed combat sport event in history. And as Jane Wells reports from Las Vegas, there's big money behind this much-hyped fight.
The Mayweather-McGregor fight has been hyped with a roadshow.
That's a $3 million fighter. It's an $800 million fighter.
A spectacle backed by spectacular money.
I'm going to outbox this man at his own game.
After 21 years, I've been hit with everything, and I'm still right here.
But this unique event had better deliver, especially for Showtime.
I don't think anybody really thought this was going to happen, but Floyd wouldn't let it go.
40-year-old Floyd Mayweather, undefeated in 49 fights, came out of retirement to take on UFC phenom Conor McGregor, who's never boxed. Pay-per-views could set a record topping $500 million, and both boxers stand to make more money than they ever have. Estimates have Mayweather's purse in the $300 million range. McGregor could make $100 million, 3 times what he's made his entire UFC career. So much hinges on the pay-per-view money coming in right before the fight.
It's a little bit of a game of chance, and it is a nail-biting experience.
The odds suggest it's not even a contest. Mayweather is heavily favored. But so many people are betting on McGregor that if the Irishman pulls an upset, Vegas sports books will lose millions. But would it be the worst thing ever to happen in this area?
It would be, without a doubt.
Jay Rude runs MGM Resort Sportsbook, and he sees a silver lining even if he takes a bath on a miraculous win by McGregor.
We're going to have people lining up to cash tickets. Those people are going to spin around. They're going to go out to the casino. They might play some table games. They might go to dinner. They might go to a show that they wouldn't have gone to.
If McGregor wins, bad for MGM?
No. Great rematch, hopefully.
MGM Resorts President Bill Hornbuckle calls the fight Las Vegas's Super Bowl, which will bring in $150 million to the community. And security is tight.
In today's environment, yes, there's heightened security here in anything of this scale that we do. I think anywhere you would put this in the world, not just Las Vegas.
But Sin City's biggest bet right now is that Saturday night will deliver a real fight, not a farce. For Nightly Business Report, Jane Wells, Las Vegas.
Coming up, meet the entrepreneur who started his first venture as a teen and grew it into a big business. Tonight's How I Made My Millions, next. Here's a look at what to watch for next week. On Monday, Amazon-Whole Foods merger is expected to close. Along with that will come lower prices at Whole Foods stores. On Friday, the major automakers will release their monthly sales numbers. And also on Friday, the government releases its employment report for August. And that's what to watch for next week. Apple is considered one of the most valuable brands in the world. Its stock is up nearly 40% this year alone. And that is great news for entrepreneur Larry O'Connor, who built his business off of the tech giant's success. Tyler has his story in tonight's How I Made My Millions.
Chances are you've never heard of Larry O'Connor or his business, Otherworld Computing. But its products can be found in millions of computers around the globe.
We ship literally thousands of pieces out of this facility each and every day, so it's very, very busy.
The Illinois-based company sells and manufactures Mac-related hardware and software, as well as refurbished computers and do-it-yourself kits, all through its website, macsales.com.
2016 revenue was $120 million, and now we're looking to grow 10 to 20% this year.
Larry's fascination with the technology started in his early teens, the day his dad, Larry Sr., brought home an Atari personal computer.
I gave it to him, not exaggerating. It was like touching a match to gasoline.
And it became kind of my gateway into a very different world.
In 1988, at age 14, Larry started his first computer-related venture, working on printer ribbons from a tiny office inside his dad's barn. But his focus soon changed to the computer itself.
It was sort of self-necessity. I needed more memory, I needed more storage.
The precocious teen started buying parts and souping up his Apple computer all by himself.
And I said, you know, not only can I do this myself, but I can help others do this.
He wasn't thinking of making money from it, but in 1989, after a shortage of memory chips sent prices soaring, the young entrepreneur figured out how to sell the chips for less and offer them online where no one asked his age.
I was a kid, they didn't know I was a kid. The beauty of the internet, this was America Online back in that day.
That's not to say it was easy, especially in 1990 after Larry expanded his inventory and started making his own products and moved out of the barn.
Somebody locally broke in, stole a bunch of inventory, didn't have business insurance, learned the things that don't kill you, they make you stronger.
And it did all the way through high school.
When I went to college, I'll be honest, that almost destroyed me.
Business got to a point where I had to make a decision, either focus on school or focus on the business.
So he dropped out, set up a website, and expanded manufacturing.
I didn't think about it becoming a multi-million-dollar organization. It was build and go and keep growing.
By 2008, Other World Computing, or OWC, opened this nearly 40,000 square foot facility in Woodstock, Illinois. And today, the company employs 230 workers across 3 campuses in Illinois, Nevada, and Texas. Larry attributes his success to repaying debts and never relying on outside investors.
There's been no private equity. We had bank loans to help support inventory growth and accounts receivable, but it had to be profitable. If it wasn't profitable, we wouldn't be here.
Larry says he's on track to grow Other World Computing into a $500 million business over the next 5 years. We'll keep track of him. That is Nightly Business Report tonight. I'm Sue Herrera. Thanks so much for watching. Have a great weekend, and we will see you on Monday.